Hey traders, John Fortune here with a market update video for you for the 26th of November 2018. As always, what we're going to do, we're just going to start off by looking at the economic calendar, and we're just going to do a run through of the data coming out this week, how that could be affecting the markets and how we can potentially look to approach these pieces of data coming out. We'll also go and have a look at the currency strengths. And I'll run through exactly again because I had a couple of questions saying that, just asking in this video. I'll just explain a little bit more for those who are still a little bit unsure exactly how we're looking and using these currency strengths. And then we'll go and have a look at the charts, and we'll apply what we've already looked at in terms of the economic data and the currency strengths, and look at the technical setting up into charts. Those who have been subscribed here for a while, you'll know that this is the order we always follow. We always look at the data first. Then we go into the currency strengths, and this kind of top down all the way down to the charts is the last thing we look at, looking for the best opportunities in the market. So starting by looking at the economic calendar as we usually do, you can see that we do have President Draghi speaking today. He is due to speak before the European Parliament Economic and Monetary Affairs Committee. This is certainly something we could see acting as a catalyst coming into the markets today. We also have Carney speaking, although he's only speaking about a book from the former Fed chairman Alan Greenspan. So unlike the Draghi speech, I do not see this speech by Carney being anything that we really need to note in terms of trading for this week. Certainly we'll come back to this, but certainly this is something that we need to pay attention to, looking at this as a potential catalyst this week. If we come down on the Tuesday, you can see that we do have some consumer confidence, but this is not something I see dramatically changing the markets. We may see a bit of volatility, not something we really need to plan ahead for. This is more to do with the macroeconomic side of things. In terms of later on Tuesday, we have the financial stability report, and we also have the governor of the Royal Bank of New Zealand, or speaking at 10 o'clock and 12 o'clock. These speeches, as well as the financial stability report, so we can say anywhere between sort of 8 and 12 on Tuesday. This, in a similar vein to the ECB Draghi speech up here, is something that has a very good chance of providing a catalyst in the market, bringing volatility into the market, and something we need to consider starting the week. Why? Because when we have these big news events or these big economic pieces of data, the ones that can really move the markets and act as a catalyst, what you find is very often in the lead up to these pieces of data, those particular currencies can be corrective and just move sideways. So we need to pay attention to these, because there may be a lack of opportunity in these pairs before the news events, and then during and after the news events there might be quite a bit of volatility. So we do have to pay attention to that coming into Tuesday evening. Now coming into Wednesday, we do have the bank stress test results out of the UK. It says tentative, which means that it isn't actually penciled in exactly when this will be released. There is a chance that this could pass fairly uneventfully, but it really depends on what the results are. If there are any surprises, we could see this. So this is something we do need to pay attention to, and we're just going through, and then we'll come back and summarize all of these at the end, and the way that I'll be looking at these going in ahead for the rest of the week. But something we need to potentially pay attention to, and we'll come back to, is the stress test results. We do have GDP coming out of the US on Wednesday as well, and we do have a speech from the Fed chairman, Powell. He is not given a speech that, again, these people can move the markets, but I would see this passing fairly uneventfully. In terms of the GDP, it is an important data. It's not an early indication of economic health. It's actually a bit further down the line. So in terms of GDP, yes, it's important, but I don't see any fundamental changes in the currency markets based around this GDP. We'll probably see some volatility because you get people trading the GDP figures, but they're actually not something that is likely to bring in anything more than just a bit of short-term volatility. Why? Because generally speaking, GDP numbers can actually be predicted in advance if you're looking at leading economic indicators. So I don't see anything really changing here in terms of the US dollar. Not really something we need to pay attention to in advance. Not something I see the US dollar correcting into and providing a lack of opportunities, all the way up to Wednesday, just because of the GDP data on Wednesday. So Nothing really there in terms of the US that we need to concern ourselves with too much. The business confidence out of New Zealand, again, similar in a way to the GDP. It's likely to provide a bit of short-term volatility, but I don't see it reversing any trends or anything like that. Same with the private capital expenditure. We have another speech on Thursday from Draghi. He's talking at a research forum here, the Global Research Forum. So this is not in the same league as his speech today, where he's actually speaking before the Economic and Monetary Affairs Committee. So I don't hold this in the same regard as I do this speech today. I see the speech today really as being the potential driver or the catalyst for the moves in the markets, certainly in the euro and then also in the US dollar as well, because the euro makes up the majority of the US dollar index. So I really see that as the thing which is likely to kickstart the euro and perhaps dollar pairs this week. Will be around 2 o'clock today. So in terms of the rest of the week, we do have the FOMC meeting minutes coming out at 7 o'clock on Thursday. I do not see really this as being a big market mover. Very often these minutes, we generally speaking know what they are in advance because we have the press conferences and the statements. So could it cause some movement in the market? Yes, I think will probably, in terms of probability, the higher probability is that this will pass uneventfully, not something we need to plan for in advance or try to trade around or anything like that. Going further down, we have Canadian GDP on Friday, and in a similar vein to the US GDP, we're likely to see some volatility in the markets. Again, not something we really need to plan in advance for, not something that I see the Canadian dollar pairs moving sideways or correcting into. So to summarize the news here, what I'm looking at in terms of potential catalysts and pieces of data that could cause corrections in the markets or a lack of opportunities, I see really looking down the week that perhaps the Draghi speech here at 2 o'clock is what could really kickstart the US dollar and the euro pairs. We may find that the New Zealand pairs do not move until Tuesday evening. And in terms of the pound pairs, we do have the bank stress test results on Wednesday. I think the way I would view the pound pairs is I would be prepared to get involved in the pound pairs before Wednesday, but just with a mind that there may be a lack of volatility in the pound pairs because of this. I think in terms of probabilities, again, which is really what we can only work on in terms of our job as a trader, I think there's a good chance if we see the euro and the dollar moving from here at 2 o'clock, we could certainly see the pound moving as well before Wednesday. So if the pound pairs lack volatility before Wednesday, we will know why. But I think all in all, I would be prepared to trade the pound pairs before then. In terms of the New Zealand pairs, I may be prepared again because of the same logic that if the euro and the dollar start moving off the speech at 2 o'clock, we may see this actually translate across the board. We may even see the New Zealand moving before then as well. I would just be cautious, and we're going to have a look at the currency strengths to show us exactly where the better opportunities look to be. But in terms of the New Zealand pairs, I'd be prepared maybe to take 1 or 2 before Tuesday, but it wouldn't surprise me if the markets didn't really move. So again, how do we use this information? Well, if we have this on Tuesday and we have this on Wednesday, there's nothing wrong with getting involved in the pound and the New Zealand pairs, but we understand that we may go nowhere in these because of these pieces of data. So it would be unwise, for example, if we had the choice of, let's say, 3 trades in the US dollar or the euro, and we had 3 potential trades in the pound, okay, or the New Zealand. Well, if we took all 3 trades in the New Zealand, we may find that actually nothing happens really until Tuesday, and the dollar pairs might all move today. So what we could do instead is we could take a number of the trades that we're looking at, let's say, this is of course depending on the opportunities, which is why we look at the currency strengths, but let's just say hypothetically we had those opportunities, we might decide that yes, this looks like a catalyst in the euro and the dollar pairs, so we can get involved in those, and maybe we just take one position, for example, in the pound or the New Zealand before Tuesday and Wednesday. So if it does move, we're involved, but if it doesn't, we're not completely loaded up with 4 or 5 or 6 positions in pound and New Zealand pairs, which just go nowhere. And we've got all our capital tied up in these pairs which aren't moving, and other pairs are moving instead. So that's really the way I'll be looking at the data this week. So again, just to summarize that, I will be prepared to get involved in dollar and euro pairs pretty much from this morning. You can always wait until after these events take place, but I'd be prepared to get involved in the markets pretty much from the get-go. And it looks like today may be when we start to see the markets moving. This could be, generally speaking, on a Monday. We see the markets are more constructing. Monday is very often considered a construction day. We'll go and have a look at the charts in a second. You'll see this is actually happening as we speak. The markets are correcting. You can see there's no major rush to pile into the markets on the London Open at 8 o'clock on a Monday. Monday, you generally want to be taking it a little bit slower and just assessing where the markets could be structuring for the rest of the week. So we'll be looking to get involved pretty much straight away. The speech today out of Draghi I see as being the potential catalyst, certainly for the euro and the dollar pairs. And then perhaps if we don't get, either we'll get the pound and the New Zealand pairs moving on this as well. But definitely the New Zealand pairs, we could see more volatility come into this, okay, tomorrow. So if you are trading the New Zealand pairs before this time in the same way as the euro or the dollar pairs, again, as we discuss in previous videos, really the 4-hour chart is going to be the safest place to place stop loss, because why? This is statistically where the swing highs and the swing lows in the 4 hours, statistically where news events will not take out these levels. Okay, it doesn't mean that they won't, because if the news comes out against you, okay, and you're wrong in your position, then you'll get stopped out. But if you are correct in the overall direction, let's say, and price pulls back, and again, I know for those who've been subscribed, we cover this a number of times, but it's better to just repeat it so it goes in and you can learn this again and again and again. The repetition will sink this into your minds quicker. But if the market is going to continue down and you say you take a short here, you may find that the market does something like this and then continues down. So if you're placing your stop loss in the 4 hours, you avoid the volatility. It doesn't mean you won't get stopped out if the trade is wrong. It just means that statistically speaking, you'll avoid a lot of the volatility around these kind of news events. So let's go and have a look at the currency strengths and the individual currencies, see how they're shaping up, and this will give us an idea of what we can start to look for this week and what I'll be looking for personally this week in the markets. So we can see here that in terms of the individual currency strengths, the US dollar is the strongest currency at the moment. We have the Swiss franc and the Canadian dollar kind of holding up slightly in the neutral area. And on the weak side, we have the euro, the pound, the yen, the Aussie and the New Zealand, and we also have oil, which is fully weak as well. Now, in terms of these currency strengths, if you click on the trading dashboard spreadsheet here, you can download this Excel spreadsheet, and we actually explain in here exactly how we're using these. It's a very simple structure, but it's very effective. And the way we're using this is that ideally we want to be pairing off bullish currencies with bearish currencies. As a rule of thumb, you can trade currencies which are one column away. So for example, if you wanted to trade the US dollar against the Swiss franc, you could do, because you have a slightly bearish to neutral currency against a bullish currency. It's not going to provide you the best opportunities in the market. The best opportunities in the market are going to come from the US, are going to come from the bullish against the bearish currency. So generally speaking, if they're in this area, we can consider this just to wait and be patient, okay, because they're correcting, they're kind of neutral, and we want to see a strong currency like the US dollar paired against a weaker currency which is actually declining. This pretty much means these are going sideways. So if you trade a strong currency against a sideways currency, you may find that actually you do still see the US dollar appreciate, let's say, against the Swiss franc, but it won't appreciate as much against the Swiss franc if the Swiss franc is neutral than it will against, say, the euro. So why would we want to tie up our money in US dollar Swiss franc when we can trade, for example, the euro dollar? Because we know we'll have a more explosive move based on the current strength of the currencies. So as a general rule of thumb, you can trade these currencies if you're looking to, because what these do is this actually shows us the currency pairs that we're looking to trade. Okay, this is the trade selection process that we're using here. Otherwise, you have a number of currency pairs. How do you choose which ones are the best ones? Well, we don't just say, well, we like to trade the euro dollar, so we're going to trade the euro dollar. What we do is we find the individual currency strengths, and then that shows us which pairs to go to. So, for example, we can see this morning that the US dollar is strong, okay, and the euro is weak. Therefore, we should really be looking to buy dollars and sell euros. Okay, so what is the currency pair that gives us this opportunity? Well, of course, that would be euro dollar to the downside, because if you trade the euro dollar to the downside, what you're actually doing is you are shorting euros, you're selling euros, and you're buying dollars. Because if you go short, you have to sell something and you have to buy something as an equivalent. Otherwise, you can't just sell something without buying something else. Okay, you're essentially, think of it like you're transferring your money from euros into dollars if you go short to the downside euro dollar. So euro dollar to the downside is certainly one of the pairs that I'll be looking at this morning. Pound, shorting pound and long the dollar is another pair that I'll be looking at. So pound dollar to the downside. Buying dollars and selling Japanese yen is also another opportunity that I'll be looking at this morning and for this week. So we'll be looking at US dollar yen to the upside. And of course, the same applies for the Aussie and New Zealand and the dollar. So we'll go and have a look at the currency charts now, and what we'll do is we'll be looking towards, let's go and have a look and see how the euro dollar is shaping up, the pound dollar, the US dollar, Japanese yen, the Aussie dollar, the New Zealand dollar, and we'll also have a look at oil, because oil is actually bearish. So oil is not neutral, it's still declining. It's been declining for a number of weeks. We've been short on oil pretty much since the 71, I think it was 71.50 that we looked at was the first time we went short on oil. It's now down to about 40 something. So oil has just been declining. There's really no reason to look at going long in oil until we actually have a reversal. We'll just keep shorting this to the downside. At some point, of course, like always, when we're trading something and it's moving to the downside, it will turn around on us eventually. But that's just part of trading. We can't avoid losses. We want to just keep trading this to the downside as long as it's declining. So let's start off with let's go and have a look at the dollar index first of all. So in terms of the dollar index, you can see that we are sitting above the 96.07, and it looks like we're finally going to make this attempt up towards the 97.80. If you look at this in terms of, we have already taken out and retested the resistance area as a support area at the 96.07. Can we get another pullback and a retest? Yes, we can. It is possible. But we also want to acknowledge the fact that we might not get a pullback at all here. So we want to be prepared to trade these if we do not get a pullback. Why do we prefer the pullbacks into here, for example? Because we get much better risk to reward. Okay, in terms of if we're looking to trade up into this area, it gives us a better risk to reward. But as you would have seen, it doesn't always pull back. So we have to be prepared to trade these if we don't get pullbacks as well. In terms of the dollar index, we are forming this pattern here. Those of you who have already downloaded the trading dashboard spreadsheet, you'll know this in your spreadsheet as a bull flag. And this is suggesting further continuations to the upside as well. So we're starting now to put together the overall structure of the market, because that is what these key levels are showing us. They're showing us the overall structure of the dollar index. Overall, it is structured to the upside. We've had a retest of the key area of the 96.07, and we're currently, in terms of price, in terms of the patterns, it's also showing us a continuation to the upside. So this is really reflecting what we're seeing in the strength rating of the dollar, which is that the dollar is moving to the upside. It is a strong currency. This is really the one, at least for the time being, that we want to be trading. Okay, because unless you're trading macroeconomics, you're not trying to predict the future. If you're trading fundamentals, and you're looking to position trade and you're looking to hold trades for anywhere between 3 months and a year, then yes, you want to be trying to predict the economies of these countries. If you're trading on a shorter term basis, anywhere between, we're looking really here at a time frame of around a few days to a week, or a couple of weeks, even a month is a short term basis in trading, then you're not trying to predict the future here. What you're doing is you're trading what you see in front of you at the current time. And at the current time, the dollar is currently strong, so we want to be looking to buy dollars. So let's go and see how this translates into some of the pairs. In terms of the euro dollar, you can see that we have bounced from the key area at the 1.14375. There was, for those of you who have the TFT course, you can see that this was a winning position from last week. There's nothing wrong, as we go through in the course, on holding on to those trades. Okay, if you want to hold on to these and look for the bigger returns down towards the major support and resistance levels, that's completely fine. You can do that. There's no problem with that. And actually, as I say in the actual course itself, once you become more comfortable with your trading, you do want to start moving those targets out and looking for the bigger returns as well. But if you were sticking to the guidelines outlined, this would have been a winning trade from last week. And we're basically setting up for another opportunity, another trade, exactly following the guidelines in those in the TFT course, for another setup, for another short to the downside. So there is a setup here in the euro dollar. You'd have to go through and put this down as we describe it in the course. But otherwise, it does look like we're going to get further declines. We see this inversely to the dollar index. We actually have this continuation pattern to the downside, which is a bear flag. So all things considered, it does look like we're going to get further declines in the dollar. Now, can you take a position in the euro dollar, for example, like this? Say you decide to short somewhere here in the euro dollar, and let's say you put a stop loss up in this area. What happens if you take a short to the downside and price does this? Pulls back up and retests the 1.14375. What does that mean? Well, it just simply means that you've been stopped out trying to short this to the downside. It doesn't mean there is any fundamental change in the euro dollar. It doesn't mean the US dollar has suddenly become weak. It just means there is a bit of movement, possibly even intraday volatility in the euro dollar, and it just means that you need to reposition yourself unless there's been a fundamental change. You know, say we get a major breakout like this in the euro dollar and we start to do something like this. Unless we see something like this, this is just a bit of volatility and it just requires a bit of repositioning. So one of the dangers when we first trade these markets is that very often new traders will take a short, for example. They do all their homework, they will have all their positions, their levels will all be correctly identified on the charts. They might go in and they might even have a good trade selection process, like looking at the individual currency strengths and then pairing off the strong and the weak. That's a professional approach to trade selection. And they may do all the hard work, look at the news, and then they take a trade in the euro dollar short, for example. They get stopped out and they suddenly question everything that they've done. Oh, maybe I was wrong. This was wrong. This should be maybe going to the upside. When the reality is, it's just a small movement and perhaps a new pattern forming. Maybe this is just forming a range like this. Okay, so let's just do this a bit clearer. So instead of forming a bear flag like this continuing to the downside, perhaps instead what it's forming is a bit of a kind of flat pattern, okay, like this, before continuing to the downside. So if you're in this position, you do your homework and you see that the dollar is the strongest currency, the euro is weaker, and you take a short, okay, and this is why we have risk management, because you're going to take losses in trading. You know, there's no way of avoiding it. It's like paying your electricity bill as a business. Small losses in trading are part of trading. Big losses, they are avoidable. You want to avoid big losses, but you can't avoid small losses. So if that happens, you just have to reassess. Of course, the first thing you want to do is just make sure that nothing fundamentally has changed. Are the currency strengths still showing dollar strength, for example, and euro weakness? If the answer to that is yes, then we still just want to be looking for further declines. And maybe we say, okay, well, instead of a bear flag here, this has morphed into because when you're talking about waves and structure, you do get them changing into different structure in real time. This is what makes real-time trading slightly more tricky than, back tested is always 2020. When you do it for real, you can have a bear flag turning into a flat pattern, and it just simply means you need to wait for the same thing to happen. So it's not difficult if we get, say, a move back up into this area. It's not difficult to just simply, you could just counter trend line this, okay, and then you just simply wait for the same setup. Okay, so price comes up. Let's say you have a stop loss up here and you take a loss on this. So let's say you're down -1 because you've taken a loss on, say, 1x or whatever it is you're risking per trade. You take a loss of -1. Price comes up, retest down here. Price breaks back down, and then you have the same setup over here as you're looking at here, and then this time price starts to decline to the downside. If you take targets down here, let's say you might end up +1, okay, because you've made 2 over here and you've lost 1 over here. Or if you can hold out and you're looking for bigger targets, it could be 3 or 4 or so, okay. So it's just a question of if you do get stopped out on an initial position, it doesn't necessarily mean the overall direction was wrong. It just means the market may be correcting into something else, and you can just simply reapply a counter trend line, for example, like this, and then you can just look for the same setup and just be patient and wait for the similar circumstances to arise. So in terms of the euro dollar, it does look to be setting up for an opportunity as we speak. Perhaps I wouldn't be surprised to see this moving either, like I say, perhaps from the 1140 roughly, or even retesting here before 2 o'clock and then doing something like this when we get that speech from Draghi at 2 o'clock. So that's what I'm seeing in the euro dollar. I'm looking for further declines again. These can be traded in any which way. I know some of you trade your own strategies as well, which is fine. Nothing wrong with that. These levels are designed, the currency strengths and levels are designed. You can use these with any strategy. But if you do have the TFT course, you can see we have something setting up here already. In terms of the pound dollar again, this is another, you can see all the criteria has been fulfilled. I'll change this from black to green. All the criteria here has been filled for another opportunity in the pound dollar, and you could actually have sold this up in this area last week. Looking for further declines again in the pound dollar, certainly in the pound dollar, and we're looking at all of these in the 4-hour time frame. But of course, as we go through in the TFT course, you can do this at any time frame. Once you have the overall direction, you can trade these all the way down really to the 15 minutes. Once you get to the 5 minutes, you're starting to trade against algorithms. But anywhere down to the 15 minutes, the 1 hour, it is, because the markets are fractal, it just simply means you can trade those on any time frame. But we're just going through the 4-hour here to get the bigger picture. And in terms of the 4 hours, you can see there has already been an opportunity here from last week. And it looks like we're actually setting up for a continuation now down to the 1.2667. Certainly in any of the pound pairs, it's not a bad idea to actually just take the opportunities in the 4-hour, because we have this ongoing Brexit negotiations, and we now have the voting on the deal, which I believe is on the 12th of December. So there's quite a lot going on in the UK that can bring volatility into the pound pairs. So the pound pairs do actually come with inherently more risk if you're trading them, which is not a bad thing. I mean, you don't have to be scared of risk, you just have to control your risk, because with risk comes opportunity. Okay, if there's no risk or there's no volatility, there's no opportunity either. So we don't want to be scared of risk, but we just want to control it. Again, we just want to make sure we understand that there is more risk attached to the pound pair. So what is one way we can control that, for example? Well, if you know there's more risk attached to the pound pairs and you decide to take 8 pound trades, okay, and a piece of news comes out and you get stopped out on all of them, you haven't controlled your risk there, because you've taken 8 times the amount of risk all on one currency, and then you've had specific pound news come out against your view of the pound. Okay, in this case, it could be to the downside against the pound dollar, the pound yen, the pound New Zealand, and everything else. And then what happens is you've lost your money across the board, because you've traded 8 times the amount on the pound. Okay, so we don't want to be scared about taking these risks, but we want to make sure we control them and we're sensible with them. So I do see further continuations down the pound. Again, because of the way this is structured, we're already below the 1.29533. Can we get another retest? Yes, we can, but it wouldn't surprise me if we started to move down pretty much from the 2 o'clock speech from Draghi in the pound dollar as well, because I'm viewing the speech from Draghi as potentially being the catalyst that starts to push the US dollar index to the upside. So in terms of the US dollar yen, the US dollar yen is setting up fairly similar. We do have this bounce from the 112.810, and we also have we don't really have the flag part of the bull flag forming, but we do have this momentum to the upside, and you can see it looks like we're probably going to end up, I would suspect maybe we end up with another pullback and then a test of this, or we just break straight through looking up into this area. So you would still need, in terms of the US dollar yen, a bit of a correction, because of course the corrections in these markets are what give us the opportunity. So if we're looking for, let's say, euro dollar or US dollar, let's say we're looking for US dollar yen to the upside, if we come in and we see the US dollar is strong and the yen is weak, we're looking for US dollar yen to the upside. Now, if the US dollar yen starts to decline like this, we shouldn't be saying to ourselves, oh, what's going on here? The US dollar is supposed to be strong and the Japanese yen is supposed to be weak, and we're seeing this decline to the downside. This is the opposite of what the currency strengths are telling us. Well, that's good, because this is what provides us the opportunity to get involved in the direction of the overall strength of the individual currencies. So we don't expect the price to move in a straight line. You know, if we have a strong dollar and a weak yen, price is not going to do this. It's going to do something like this. Okay, and we know our overall direction is this way, and so we're using these pullbacks to actually get involved in the overall direction of the strength of the pairs. So I would see something like this perhaps playing out. We could come down and get another retest of the 11280. We're quite close to the target here. So in terms of the US dollar yen compared to, say, the euro dollar and the pound dollar, we have much greater space down towards the targets here. Okay, the US dollar does, for that reason, provide a slightly worse setup than, say, euro dollar and pound dollar. So perhaps in the US dollar yen, because we don't necessarily want to trade every single pair, but maybe the best opportunity will come when we start to get something like this for this kind of move up here. Okay, it is still an opportunity, but because of how close the next target is, next key area of resistance, it makes the euro dollar and the pound dollar slightly more favorable, in my opinion. The Aussie dollar is a really nice one as well, because we have a number of things that are setting up here. We're setting up in the 4 hours for one of the setups that we cover in the TFT course, for those of you who have it, and we also are setting up right at a possible right shoulder of a head and shoulders pattern. Now, in terms of measuring this, of course, what we do here is, for a technical head and shoulders target, is you take the neckline, so you run the neckline, and then you just simply measure from the potential break of the neckline. If you want to be a bit more conservative, you could say somewhere perhaps here, and you take it from here. So you've got the neckline to the head. Okay, so you've got about 135 points to the upside from the neckline to the head, and you just simply mirror this down 135. So that would actually take us past all of these targets into a next target down here around the 70670. So we could very easily be taking out at least the 7131 and very likely the 7085 as well, as this is all within the scope of a potential technical target for the head and shoulders. And if we're looking at this in terms of the trading this as the setup which we go through in the TFT course, you can see that we could actually end up with a move not just to the kind of sub targets or the mini targets, but actually all the way down potentially to here. So providing a good risk to reward as well. So I do like Aussie dollar, especially when we add this into, say, the US dollar yen, where we have a fairly close target. I think the Aussie dollar is actually one of the nicer ones. And I definitely like what we're seeing here in the Aussie dollar. So I am going to be looking at Aussie dollar to the downside. Again, you can get involved in this just on the pullback, or for those of you who like to be a bit more conservative, you can always counter trend line these and wait for the break first before further continuations down like this. And this is, of course, is in the smaller time frame. So you're looking at one move here in the bigger time frame, and then you'll see one leg down likely like this in the bigger time frame, and within this leg down you'll have multiple opportunities like this on the smaller time frame. So if you are trading in the smaller time frames, just remember that you want to be aligning the bigger time frames first, so you have the overall direction right. Okay, it's one of the mistakes a lot of traders make. They want to trade in the smaller time frames because they just want to take more trades, which is not necessarily going to help them. But if you do want to trade in this, you just need to make sure it's with the overall direction of the market, because if you're trading short term against the market, you're just going to take lots and lots of losses. So it does come with heightened risk taking more trades. Okay, you can rack up losses quicker if you're not doing it correctly, or the markets are changing. So just bear that in mind. But that's what I'm looking for in the Aussie dollar. And again, all of these setups potentially appearing are exactly as we cover in the course for those of you who have it. And for those of you who may not have it but already know this, you'll see these exactly as they appear in these kind of patterns to the downside as well. In terms of the New Zealand dollar, of course, we have a slight clue, we could say, in the New Zealand dollar. And that is, again, we cover the wave structure in the course, but I'm sure a number of you will already know how these waves develop. This is what we have in the New Zealand dollar, is an impulse wave to the upside, which is 5 waves. You can see we have 1, 2, 3. Okay, and within here we have subwaves I, and again we cover all this V and V, and so this is the third wave up. Then we have a fourth wave, and then we have what looks like already the fifth wave. And again, within these 5 waves up here, you can see what looks like the wave counts up here, and also over here, 1, 2, 3, 4, 5. So it looks like we're well and truly finished the 5 waves up. So we should be expecting, in the grander scheme of things here, a bigger A, B, and a C, possibly down to the 66, 120, okay, which is a key area of support and resistance from the past. So if that's the case, we'd be looking for at least an A wave, okay, then possibly a B wave, and perhaps even bouncing, as we're looking at here, we might come down to the 6690 for the A wave. Then we may see some profit taking for the B wave, and then we may see the C wave coming down before a next rally to the upside in the next 5 waves. So in terms of the New Zealand dollar, it's giving us a slight indication. And of course, there's no guarantees in trading, but based on the information that we're seeing here, this is suggesting further declines in the New Zealand dollar, which in and of itself is confirmation that we may in fact be getting another rally in the dollar, okay, coming fairly imminently. I would be looking for first of all the 66.90 in the New Zealand dollar, and just mindful again that this may be better traded with a 4-hour trade, okay, looking to place stop losses out of the way with the data coming out on Tuesday evening on the New Zealand dollar. Okay, again, we don't go through the specific setups here because we do all this in the TFT course, and it wouldn't be fair to those who have bought the course to go through all the setups here. So there's a number of things I'm looking at in the market here this morning. I do, again, see the US dollar pairs as potentially providing the best opportunities in the market, certainly at the time being, perhaps for the rest of the week. Apart from that, we can also have a look at crude oil. Crude oil has just been providing a number of opportunities ever since this was where we first started looking to the downside, was up in this area around the 7100, and it's just declined ever since. So we're still looking for further continuation to the downside. Again, you can see we're forming a nice bear flag pattern in this area. So I would be looking potentially for a bit of a correction first and then down to this area. Can we get a pullback and a retest of 55? Yes, we could. Okay, it is also on the cards. But again, if that takes place, then we can just wait for a new. You can just counter trend line this, for example. Okay, this would pull back up like this. Unless you had a stop loss right out of the way, you can just simply counter trend line this again and wait for new opportunities to the downside like this. So generally speaking, again, I am looking at oil. I am also looking at the dollar pairs this week. I think they offer the best opportunities. Apart from that, I really would be cautious about going long, for example, euro, pound, yen, Aussie, New Zealand pairs. I also probably for the time being would filter out US dollar franc just because of the sell-off in the stock market. We're seeing these safe haven assets holding up slightly, although we're not really seeing it so much in the yen, but certainly we're seeing that a bit more in the franc. So apart from that, that really is how I'm seeing the market this week, guys. I hope you all have a fantastic week. As if anything major develops or there's any major changes and the plan changes, I will be changing we can do another market update video. Otherwise, that's what I see. I wish you all a fantastic week, and I will speak to you soon. Bye for now.